Awesome. Hey, Kristin.
Hey,
Glad you're making it on this call again today. This one will be a little bit different than before. What do you say we mix it up a little bit?
okay, sounds good. What are we going to talk about?
Well, normally you interview me, and I really appreciate that. And I thank you for letting me, expound on my great knowledge, which really, I'm like a trivia pursuit guy. I'm great to have around for trivia pursuit. But other than that, my wealth of knowledge is really worthless. But let's chat a little bit about taxes, if you don't mind, because I know
Okay.
I deal with as a financial advisor, I deal with one of the five areas of financial planning is taxes. And there's a big belief system that taxes are a big deal. But when I look at them as one of the five, they're one of the five things. They're not as big in my world as people like to make them. But we got to look at them, right? We got to look at, are we doing the tax work properly, right? I'd like to hear from you a little bit about tax prep, year-end tax planning, really a differentiation of the tax professionals that somebody can hire. Is this something you're willing to talk to me about today?
Sure.
I
I
know
wrote them
this
all
is,
down.
I know you weren't really prepared for this question, so this is all off the cuff here. And for those of you listening, please understand I didn't prep Kristin at all that we'd have this conversation. So this is a free flowing one. I hope you guys are good with that. Let's start with Kristin. I think it's important for people to know what is really tax planning. How would you define tax planning?
Okay. So there's tax planning and there's tax prep. The
Right.
majority of people get tax prep done, and that is where they're working their business, they're working at a W-2 job, they have kids, and basically they are coming in, say mid-January, January 31st through April 15th to their tax professional, and they are handing them all of the documents that they got in that says important tax document that they need for their taxes. And then the tax preparer is preparing those documents based off of the documents that they were given. No tax planning. Tax planning is where tax preparation is reactive. Tax planning is being proactive. Proactive as in we're meeting together starting now or in April, like the entire year, we are planning for what does this year, what does 2025 look like? What do I expect to owe on my taxes? What can I do to reduce my taxes? Are there any tax strategies I can start implementing for that? We know going into, say, December, if there's anything extra that we need to do or that we should be doing last minute that will make a difference on 2025's taxes or in the future, for that you kind of know what your tax bill is already. And again, you are just being very proactive about it and you know exactly what's going to be coming or pretty close to it.
So, listening to you, is it fair to say that majority of the people are doing tax preparation? And so when
Yes.
a consumer goes to get their taxes done, they're basically working with somebody or working with the online system or working with the computer program that you enter the information in and the information is processed and sent to the IRS. There's no
Yeah.
real thought to it per se.
Correct.
Right.
Yeah. And whatever you end up owing, it could be a lot, it could be a little, you could be getting a refund. I mean, it's it. The only real thing that we can play with numbers wise is if you have a business and you bought fixed assets, I can play with the amount of depreciation. If you have a gain in your business, we can take section 179, or if bonus 100% depreciation is back and it's permanent now. So we can play with those depreciation numbers, but that's basically it. There's no other tax planning that can be done if we're just doing tax prep. After the year is done, there's not much else we can do. Whatever you bought, whatever you made, whatever you like, it's done.
I used to say all the time, it's once 1231 hits, it's done, we're good. Tell us what you did and we're over. It's really
Yeah.
getting the work done before 1231 and seeing what your income is year to date, seeing what your expenses are year to date, determining prior to 1231 how you're going to, as you example, take depreciation. Do we 179 it to depreciate? What do we want? Do we accelerate depreciation on certain assets? And how do we do all this? That can only be done in the given tax year,
In the
not
year.
before
Yeah.
1231 hits. So that's point number one, folks. If for those of you listening to this, if you want tax planning, you've got to sit down with your tax professional prior to 12/31.
I even have a little example for you. So I have a new tax advisory client and we're doing tax planning for him. He wants to know about buying a new vehicle. So those are things that we discuss. And unfortunately, and I kind of say unfortunately, is back in 21 when bonus depreciation was 100% again, he bought a vehicle and his CPA at the time 100% bonus depreciated it. And they did that with all the vehicles. They have 4 in the company. And now, and then of course, it was tiered. So I think last year was 60% or whatever, and bought a new vehicle and wasn't able to 100% depreciate it anymore. And they've been owing taxes ever since. And they're mad. Plus the business is doing better. I mean, the business is growing. But then when you trade in that vehicle, so for example, his vehicle, I can't remember what he bought it for, but it's worth $65,000 trade in value. It's worth 0 on the books, but it's worth 65,000. So we're going to have to pay ordinary tax rates on that trade in vehicle of $65,000. And I think they're in the 24% tax bracket. So you can kind of do the math there. So that's a lot. And then I told him, I don't really recommend doing the 100% bonus depreciation of the $80,000 new truck that he wants to get. I'm like, it's up to you. Ultimately, it's your business. We can do that. But when I ran the numbers for him, I was able to give him clear cut numbers. He was only getting an $8,000 tax benefit from buying this new truck because he's having to pay the taxes on the trade in and then doing the 100% bonus depreciation. But then again, he's in the same spot as he is with the other vehicles where they're worth 0 on the books. We can't depreciate it anymore. And it's a one-time gain. And so I actually told him, I'm like, if you are open to it, I would rather see you, because he's like, well, I have $35,000 worth of equity in this vehicle. And I'm like, you do? I'd rather see you take that $35,000 worth of equity. And if you are willing to get into the real estate and start doing rentals, I'd rather see you put it down for a down payment
Mhm.
for that, where you have a fixed asset that's appreciating in value. So it's gaining value instead of depreciating in value. And plus there's, a short-term loophole where we can bonus depreciate some of that new, say, rental property on the lake, whatever they're wanting to buy if we do a cost segregation. So that's how stuff that I talk to my clients about. So we're
Mhm.
even getting down to vehicles and how it's going to affect them tax wise.
Well, and I'm so glad you used this example. Thank you. This is the reason I think that the advisor, the financial advisor, and the tax planner really need to communicate well. Because in this example, I know we're not working on this particular client, but as an example, this is a great viewpoint of where we at today versus where we want to go tomorrow. And throughout my career, it's always been kind of an argument, kind of a fight with the tax professionals of, wait a minute, do we sacrifice tomorrow by taking the tax benefit today?
Today.
And many people who know me know I'm not a huge fan of deferring the tax to tomorrow. In fact, I like to say, pay the tax today because you know what it is today
Yeah.
versus adding tax risk to tomorrow.
Hmm.
So this is a great example. Do we depreciate it or not? Now, granted, oh sure, we'll pay a little bit more tax today, but what happens when we want to trade the car in? What happens when we want to shift in the future? And I love what you say. Look, let's use that 35,000 and either go into real estate. Not a big fan of pre-tax plans, but maybe a 401k, maybe a SEP. I don't know what kind of business structure they have, but maybe something like that could be beneficial if
Yeah.
we balance out pre-tax, after-tax contribution so that off into the future, we don't have a hit of taxable only income off into the future. Love this. Love these kind of conversations. And I hope folks listening, I hope your advisor and your tax professional, your financial advisor and your tax professional are having conversations like Kristin and I have. This is what we do
Yeah.
so that we can find the right answer for the client. And there's always going to be a fight, folks, just so you know, there's always going to be a fight. The financial advisor who's asset management person only, they're always going to want the money to manage because that's what they get paid to do. Or they're always going to want the money to buy life insurance because that's what they get paid to do. Most financial advisors are in those two categories. But rarely do you find somebody who says, oh, yeah, you know what, go buy a piece of real estate because that as an asset class is a good class to have as well. But this is where, Kristin, you and I love this kind of work we do together. Let me move on because I know we have a lot of
Okay.
time in the conversation. Let me move on. there's a lot of people who want to hire the CPA. I mean, CPA has captured the tax professional out there, and I love my CPAs that I work with. They're really, really great people. But there's also EA, and would you mind sharing a little bit about what's an EA, and how does an EA really differentiate from a CPA, knowing that they're both qualified people to work with? Don't get me wrong.
Yeah. So an EA is an enrolled agent, and they focus primarily only on taxes. And actually, that's what I'm studying for right now. It's 3 tests. I just passed the second test a few weeks ago, studying for the third.
Congratulations.
Thanks. My goal is to have that really done by the end of this year. But an EA they are recognized by the IRS on a federal level. So they can practice in any state. If you have a tax letter, you can go ahead and call up an EA and they can fill out a power of attorney for you, call the IRS and figure that out on your behalf. Currently, there's another thing called an annual filing season prepare, ASFP. That's what I currently am. They still have to do the CEUs like an EA does. As of right now, I can only, if you have an IRS letter, I could only represent you if I did your tax return. So that's one thing. The EA can represent anyone who comes in, and I think they have to have 72 hours worth of CEUs every 3 years, and they have to get so many a year. And then there's a CPA. CPAs, they have 4 tests to take. And they can also do audits. So CPAs, like if you have a business that needs to have an audit done, you need to go to a CPA. They also have to have, I don't know, 72 hours of CEUs every year. Might be a little bit more or different. But the thing is with CPAs is they are state specific. So I'm originally from Wisconsin. If I were to have gotten my CPA in Wisconsin, I would only be able to practice up there in Wisconsin. And when I moved down to Texas, I'd have to go through the Texas CPA. So, and sometimes like there's a,
Reciprocity.
yeah. So like if you're in Texas, I think you can do like Oklahoma or Louisiana, but otherwise you are really tied to the state of Texas. So if you move, you're going to have to go ahead and get whatever the current CPA is for that state. So that's the big thing. CPAs can do audits and they can do taxes. One thing I do want to point out is a lot of times once you graduate college and get your CPA, you will go into a big firm and
Mhm.
you will either focus on either auditing or you will focus on tax. If you focus on tax, you may not have the audit experience or vice versa. If you focus on audit, they may not be very well versed on taxes. So when you are interviewing a CPA, that is one thing you want to ask is where is their primary focus on audit or taxes? Because it's
Mhm.
rare that they will have both.
Got it. That's interesting to know that there's that tax versus audit.
Yeah.
And I think a lot of companies do need a CPA. You're right for the auditing
Yep.
standpoint, but a lot of individuals and maybe solo practitioners or small partnerships, small LLCs, single member LLCs, S corp, single member S corps. I don't know that they need a CPA level. I think
No.
all the tax work, planning especially, can be done by an EA, and I'm proud of you for being
Yeah.
a one class away from getting that
Yep.
done. I know that's
Thank you.
huge. That's congratulations on doing that. Folks, I just wanted to take this time today and just share a bit on planning, preparation. Thank you, Kristen, for pulling this together. Um, Folks, we're coming in toward the end of the year. I like to say it's August 11th when this is being recorded, and we're back to school, back to work. I've in my 30 years of business, summertime's always like, yeah, whatever, I'll get to it whenever. Now kids are back to school buses are out on the road. Watch out for them, please. And now let's get back to work between now and probably Thanksgiving before we hit the holiday season.
Yes.
And this is the time frame where I work with my clients, work with Kristen, so that we can look at clients year to date, income year to date, expenses year to date, and we can do actual planning. So they're not hit with any of this year end, finish it. Now we got a big surprise in April or whenever we choose to file.
Yeah.
So, Kristen, thank you for taking the time and explaining this difference with us. And folks, reach out to Kristen, reach out to me. We'll make sure that your tax planning is done well and preferably in coordination with your financial planning. So,
Yeah.
Kristen, thank you.
All right. Thank you so much for interviewing me today, Peter. It was a pleasure as always.
My pleasure.
Thank you.